Better get up and get going pretty quickly then, because my time's probably already started. We're an Australian-based company. Two assets. A nickel asset that has infrastructure, over $100 million of replacement infrastructure, including a processing plant, underpinned by a resource and an exploration target, which put together is approximately 4 years of production. It's currently on care and maintenance. We have in the New South Wales region a new exploration project which is emerging as we speak. We've just recently started drilling in that region and are waiting for a number of drill results. We'll be bringing that forward into next year, and we have a number of targets to drill. Importantly, what we are is cash-backed. We have a $57 million market cap, and we have $57 million of cash in the bank at the moment, following a transaction for a minority interest in a joint venture that's currently under development. We've sold that for over 100% of the predicted cash flows and retain a 1% net smelter royalty upside on that project. So basically we have two assets, an exploration project in an emerging district and a nickel asset with infrastructure that has latent value and resources in ground and cash backing. Of the cash, we received a large proportion, obviously, of the cash flow, or in fact more than the predicted cash flow up front. We're looking to return a substantial proportion of that to our shareholders. We've intimated to the market that this could be up to $46.5 million or 25 cents, and we currently have a 30-cent share price. That will leave us with what we feel is an appropriate cash amount to create value from the assets that we have retained in the company. You can see there the share price over the last year, and the increase in June was when we announced that transaction, which recently closed. We're very well supported. We have a major shareholder in Kerry Harmanis, who has previously been involved with a company called Jubilee Mines. He's a big supporter of the company, and myself and a number of the board were also involved with that company, which is a successful nickel miner that sold to Xstrata in 2007 for $3 billion. So we have the background, although we're in a junior company, of a major and of transacting, developing and financing operations. The New South Wales project that sits here is where we've recently picked up the ground. We've just commenced the work. It sits between the Cobar region to the west, which is the yellow that you can see there, and some of the big porphyry regions to the right where Cadia sits. We have 3,000 square kilometres, and you can see in that red there. It's been mineralised historically. It's a good region to be in, but it's very underappreciated at the moment. It's been mined in the 1900s, but very, very little modern exploration. This is a zoom in on the tenement package. As I say, 3,000 square kilometres, which we split into the northern, the central and the southern region. You can see the Cobar mines out there to the west, Peak CSA mine from Glencore, and some of the historical old workings and old mines from the 1900s that are within our tenement package there. The first work that we've commenced on is the southern region. This is just zooming into that region here. We've only done one drill program to date that we've managed to get results into the market for. We've got 3 other programs that we currently have results in the lab for. I'll talk about them in a moment, but just to orientate the work that we have done, it's in this zone here that you can see the blind calf position. This is where there is a north-south structure with quartz vein outcropping, multiple mineralised positions that plumb deep into the major structure. You can see those in a moment. Untested positions. And some old, as I said, old workings from the 1900s where they were pulling out 10 to 15% copper. That's the black holes that you can see there. We've focused in that region with our first drill program, 9 holes, which you can see in the yellow dots there. And they return some very good mineralisation. I'm just going to draw into a long section now where we did our first drilling. And you can see there that the shafts there at the surface, and then the narrow drilling that was done by a company in 2010 got between 1 and 5% copper. We've stepped out with our drilling a bit deeper and we can see that it's extending along strike at the moment to around 70 metres strike, which is consistent with some of the ore bodies in Cobar. And we've got out from our original drilling 13 metres at 5%, 5% copper, 11 metres. And what we really like about what we're seeing here is that there is some high-grade components in that drilling of around 11% copper, 2-metre intersections in all of those holes, which means that that region, localised region that we've got the ground, we think is very prospective for repetitions of this type of mineralisation. This also fits the model of the mineralisation in the region in the existing mines. We've followed that up with some of these black holes that you can see, and we're waiting for results from those as we speak. As we step out into the wider tenement package from that red ovoid there, it's blowing calf, the two trends that extend down into the larger package. What we like about this from an exploration perspective is that it's got very little cover. We can do very cheap work to identify targets. We've done that, $100,000 for a month and a half of work, and identified a number of areas for testing into the new year. And you can see those anomalies there from some very cheap first pass work, which will be followed up with detailed testing. The project in the central region, which we've only recently drilled as well for the first time. Again, we have a couple of zones there where we've identified large anomalies of zinc, copper and gold, 1 kilometre anomalies from cheap drilling. We've just put holes into there and we're waiting for results as we speak. Plus, from some of the old information from the 1970s, there's an IP anomaly that we've tested and we're waiting for results from that. This is all copper, gold focus as our priority targets in the region. So this is a project with the funding that we have behind us that has a good pipeline to deliver news flow into the market, to deliver targets and deliver propensity for success. So we really do like this project. The other asset that we have is the Sinclair Nickel project. This is the processing plant. It's a 400,000 tonne per annum processing plant. This is 100% owned, an $8 million acquisition from Glencore in 2014. Our capital has been put into our other project, which we've recently disposed of up to this point. But it has all of the infrastructure in place for a low incentive price return to production. It also has an open pit and decline that was the historical mining from 2008 to 2013. 2.3% massive sulfide nickel was extracted, 7,500 tonnes per annum for 5 years. And what we have is we have an extension of over 1 kilometre from 400 metres below surface with mineralisation that gives us a resource of 16,000 tonnes at 2.3%, and then an exploration target as you get down where the drilling is a bit wider of another 16,000 tonnes. So there's about 4 years of production there at the right nickel price environment. We're not incentivised to do the work at the moment in the current nickel price environment, being a junior. It's not an appropriate use of our capital at the moment. But this is not only an asset that has latent value at the moment and is positioned for optionality to the nickel price with a low incentive price to restart, or lower, it also has a good strategic positioning where it is, given that there's full infrastructure and some of the other emerging nickel plays in the region. It has a lot of exploration potential as well. We have a number of positions that have not been tested at depth, and we won't be testing those at the moment, but we know that there are some mineralised positions that haven't been looked at. The type of work that we will be doing is looking at low-cost work where we can identify new mineralisation. We drilled 2 months ago and got 7.5% and 3.5% nickel within 50 metres from surface, and we're following that up at the moment with very restricted use of capital, but basically we are following up that work. A large tenement package, fully granted mining tenure, 80 strike kilometres, so we can continue to do exploration here to unlock value of the asset. And that really sums up the two assets that we have, and this just wraps up, as I say, cash backed, looking to return a large proportion to shareholders, retaining enough cash to grow the business, an exploration project with a pipeline of information to come through, and a good nickel asset as well.